Should be live. Hey guys, thank you for joining us today. Mudassir here, and we're joined by amazing team at Flashpoint and Damir as well. So this is episode 10 of SaaSLounge, and we are talking about today deal sourcing and how the Scout program actually works at Flashpoint. So hey guys, thank you for joining us.
Hello.
Yeah, so this is how we're going to start it. We're going to do a quick sort of fire round sort of introduction for everybody. So I just want you guys to take around 60-ish second and save the people from ramblings and just quickly introduce like who you are, what you do at Flashpoint, and all the fancy and amazing things that you have done. Persia, let's start with you.
Hi everyone, and thanks for having us today. I'm Persia. I'm an investor within Flashpoint VC team, and I'm also leading the Scout program on our behalf. And looking forward for this interesting conversation.
All right, awesome. Marton.
Hi, I'm an associate partner at Flashpoint. I lead most of our sort of like continental Europe deals within the team. Also help the team internally to design systems to automate most of our outreach and selection part. And looking forward to the interesting questions that we have on this call.
Amazing. Paul.
Hi, I'm a scout at Flashpoint. At the same time, I'm working in a payment processing company, but also active as a mentor with 3 accelerators across Europe, US. I think that's about all.
All right, awesome. Hey, Damir.
Hi, I'm also a scout for Flashpoint over a year now. I'm also co-founder and CEO of G+ Quant, a platform, basically a matchmaker between founders, investors, and GPs and LPs.
Amazing. All right, thank you for that. Quick on me, I was a founder turned somehow content creator. So I host PCs on the podcast, had a privilege of hosting multiple people from Flashpoint already. Feel free to check it out. It's just pinned on the bio. Okay. Anyway, all right. So I wanted to start us off with why Flashpoint started the Scout program and why anyone should consider joining your Scout program compared to any other VC firm. Because technically speaking, what we have seen is Scout programs are usually run by all these big brand name VCs, like Sequoia runs that, Excel runs that, Antler has a very good one. So yeah, let's just talk about like the why behind starting a Scout program and why anyone should consider joining yours.
Mm-hmm. Yeah, I can take that. Actually, the way that we think about it is more boot on the ground, right? We are trying different ways to increase our top funnel when it comes to deal generation. And we think that this is a great way to leverage the network of people outside Flashpoint team and bring us closer to these local communities. Because like, if you think that what we're looking for, we are looking for expats, for European and Israeli expats that are sitting in US, Europe. The geography is quite broad. And we have teams spread around the geographies that we're focusing on, but I think it's a great way to leverage people that are sitting in each of the jurisdictions that we're looking at and give us all these introductions because we are in a relationship business, right? And having also warm introductions really matters. So that's how we were looking at it, and that's why we started with the program. In terms of why Flashpoint versus others, of course, there are a number of programs out there and a number of structures, either based on success fee. We've seen many others that giving an X amount to scouts, and then on the fund's behalf, they go and invest. A number of different ways and stages that they look at. For us, what we think differentiates us versus others is we are really very data-driven organization, and we try to streamline the whole process as much as possible, because like I don't imagine a lot of people actually opening emails, sending emails, or opening different platforms to flag companies and things like that. So we try to streamline the whole process as possible, and we give tools to scouts as well, which they can use on their personal time. They can use it for their own benefit. So that's how we think, and that's how we position ourselves versus the other programs, and we receive very good feedback for that. Just to give you a bit of more background, we try to automate the whole process when it comes to onboarding, communication between scouts, when it comes to identifying opportunities, analysis, and things like that. So we make it quite frictionless between the Flashpoint team and the scouts, and we also like to give instant feedback to them, which is very much appreciated. And we have a number of compensation structures as well, so they can monetize much quicker, or they can go for a success fee, which is later when a deal closed, but lower probability but higher return. So different ways that depends on the profile of each scout. And also something to add, a lot of scouts that we have, they're looking for access to the startup ecosystem, and we're providing them with a lot of educational content as well, whether this is workshops, giving them the opportunity to sit on introductory calls with us and things like that.
Okay, awesome. So this is a question for Damir and Paul, actually, that I want to ask you.
Yeah.
What has been your experience working with Flashpoint Scout program? Like, what do you feel like, why is that better? How is that better?
Thank you for your question. I would say, and would definitely agree with Persia. It's frictionless. It's very straightforward, very open discussion. So I would say it gives you a really great platform to enter the VC sector, and also gives you some feedback if you are considering such asset class as a potential investment as well.
Okay.
Yeah.
Awesome. Paul, you got anything to add to that?
Yeah, I mean, I would add to that it's actually quite easy for you to just go there, go on a website and actually recommend a company, and then you also see that the number of companies that you recommended and the historic, and also get like a small feedback from the analyst. You can get feedback regards to is the company too early, which I think is quite relevant, and then you need to like also a bit fine tune your like filters before recommending a startup. I think it's a really easy way as well to stay in contact with the latest technologies and startups, and also if you're already active in the space, it's a way to potentially like also monetize your network and the people that you know.
Okay, that makes sense. All right, so this is probably going to be a question for Persia, you and Marton. So I want to know, what do you look for in the scouts? Like, how do you evaluate the scouts? Like, I see one of the different thing, actually, one of the differentiator here is that like most of the scouts program that you see around the world, actually, they're invite only, right? Like you look at the Sequoias, I mentioned Excel and Antler and all of them, they're very invite only. So you need to be in that one ecosystem, or you need to be a Square-backed founder in order to be a Square Scout, like whatever. But the question is, like, you guys have made it sort of like open application thing, like anybody can apply. So there's two questions on that. So question number one is, what's the thought behind keeping it sort of an open application, like anybody can apply for that? And question two is, like, what's the logical evaluation criteria that you have for evaluating all the scouts, and how do you figure out, like, okay, so this person should be a scout, this person should not be a scout?
Yeah, I can take that. I think for us, the whole idea behind scouts is, as Persia mentioned, to enhance the reach. And if you're you're putting a gateway basically into like this enrichment, then you're basically also restricting yourself, right? So what we created in the back end of the Scout program is there is also like a fully automated evaluation system, which basically highlights the key criteria for us, which is the reach within the ecosystem, the quality of the experience that these people have, and also sort of the specialty areas that they have. For us, of course, we want to associate our brand with people that are, like similar quality to what we represent. So there is also a screening process embedded. But for us, it's important to have as wide reach as possible. And we think that, by democratizing this access, we're providing an opportunity to people as well that would normally not probably have this opportunity to, get their feet wet with this experience. And we don't see any downside in that. So we don't see, I mean, our structure is also a little bit different than the rest of the Venture Scout programs, because the invite-only programs usually come with the budget as well. Our structure is mostly a commission-based structure. So, you know, I mean, that's like our philosophy. We're very transparent people, and we want to like keep the same transparency towards the scouts as well. And then we want to make sure that, you know, whoever knows founders that could be interesting for us, and send it to us, and there are no like you know, paywalls or gateways or anything like that, or gatekeepers.
Okay, Persia, got anything to add to that, or like that's fine?
No, I fully agree with what Marton said. And to be fair, at the beginning when we started the program 3 years ago, we experimented as well. We started by inviting only people from our network, but there are communities out there that is not that easy to crack. So, for example, we're covering Nordics, and we know that there are a number of like local communities there that we need to find a way to get in. So that's why that was the idea that we started also to experiment around, and we ended up with inviting people that are interested. And as Marton said, that on the back end, we do have our screening criteria and process as well. So it's not whoever wants to apply can become a scout.
Okay, totally makes sense. All right, cool. So I just want to delve deeper into like when you look out for any potential deal, like what do you actually see in that deal? So you could like technically a question from the scouts, but so Paul, you and Damir, if you would want to, take a stab at that one, what are the key qualities do you look for in a potential deal? Like how do you evaluate that before pitching that one to the team? Like how do you do all of that, or what do you actually look for in any of the company that you're recommending?
Well, I think some of the first things are, like filtering out, companies that are a bit too early, as Flashpoint is a bit, like late seed Series A. I think that's the first, and then like also focused on the verticals in which Flashpoint focuses on, and see if it's like a SaaS, because I get, for example, a lot of requests from hardware companies or for companies that are not in the geo of Flashpoint. So I think that is the first, and then there are some specific metrics that Flashpoint looks at in terms of like traction, revenues and things like that I check before I actually recommend the company.
I would definitely agree with Paul. For me personally, I start with ARR, because it gives you a very, very fast reply on where to put the team and the startup. Is it pre-Series A, is it Series A, or is it some later stage? Then I would say team and sector or vertical are other two main components. And then you can break it down, as Paul said, there are other metrics that you can use. But focusing on those 2-3, it really gives you a really nice overview where to put the startup, how to rate it, and is it worth even forwarding it to the guys, to the colleagues in Flashpoint or into Multitool.
Yeah, I would add to that sometimes you actually look also at the messaging and the way the founder talks to you. I mean, that's a bit of a finesse thing, but you can actually see if they're like really early just from that, for example.
But very interesting. So a question that comes to my mind is: so suppose you guys come across a company, looks great but does not meet your criteria. Could be your location wise, or could be from ARR perspective, could be really, really early. So suppose the company that you're looking for is a great company, unit economics is fine, every single thing, the boxes are checked, but the company's at a seed stage. So what sort of conversation do you guys have with them? Like, hey, stay in touch. Once you hit, $1 million in ARR, a couple of million in ARR, that's when, we were happy to make the introductions. So what sort of conversation happens when you find a great company, but that's a little bit too early for you?
I mean, for example, I can say that I actually tell all of them to actually keep me posted and put me in, like their newsletter or something like that, and let me see their evolution. I think that's actually one of the ways in which you actually stay in touch if you actually found a really good founder. And I think every startup out there should do that to some extent. And if you're a bit too early, you should definitely stay in touch with the investor. And when you get to the level that they're looking at, they may not be, for example, I've seen situations where funds or angels, they invest in the first round, but then they participate in the next round just because they created some report with the angel or the fund.
I would totally agree here with Paul. I have basically two strategies. One is keep me posted, keep me updated, put me on your investor updates email list. The other one is come back when you will have 1 million ARR. So you choose between those two on the conversation that you have and on the potential that you see in a startup. So unfortunately, I can say that majority of them just lose track. So it's not really in their initiative, or it's not their initiative, or they don't understand that it's in their best interest to keep the relationship going. So if I get a message on LinkedIn and I get a pitch deck and I am interested to have an intro call, despite that the startup is early, it's, let's say, below 1 million ARR, I'm trying to convey to them, look, you are interesting, but for our network, you are too early. This doesn't mean I'm not interested to speak to you in 6 months, in 1 year. Unfortunately, a lot of founders just, don't reply anymore or don't send any information later, because everybody's trying to close the funding round that they're basically get the capital as soon as possible with as least as possible effort. And that's their bet.
And they apply this sort of like the spray and pray strategy, in which they send messages to a lot of people on LinkedIn, on emails, and then whoever replies with a yes or maybe, then they'll focus on that and then forget about all the others, which I think it's not optimal, especially if you're up for also subsequent rounds as well.
Yeah. One of the most awkward thing that I see is, and a lot of founders that I meet these days, they do the same things. And what they do is they'll pitch anyone regardless of the criteria that you have. So for example, you guys only invest in Israel and in Europe, and that too is very specific, like Central Eastern Europe and all the geographics that you guys have in mind. And they would pitch it to somebody who only invests in the Middle East or who only invests in Africa. So they'll pitch it that way. And they also don't care about the verticals that you have. So I don't think that this pay to play that kind of a thing that actually works is primarily because you're just hoping somebody will open my email, somebody will read my message, and they'll get back to me, and you're asking for I don't know, 1 million, 2 million or something like that. So yeah, technically speaking, it doesn't work. The thing that you mentioned, Paul, which is around timing. So when I learned from you guys, primarily for the audience, how long usually does it take for you guys to recommend a company, and then and suppose it checks all the boxes, the criteria is matched, the founder is amazing, the company is doing amazing, all things considered, how long does it take to close the round for that one company that you guys have recommended? What's the process and how long the duration is?
Should I take that? I mean, at one point, for example, the process is taken over by Flashpoint analysts. So I think the first part is quite fast. So it can happen that, for example, I recommend a company today, and then 2 or 3 days from now, either Persia or someone else from Flashpoint takes over and wants an intro with the founder.
Okay. Martin, do you have any insights, how long does it usually take to close a round for the founders?
Yeah, I mean, it's really, it's a great question. I think, we're trying to be as fast as possible on our side, but I think it really depends on how the company is progressing, and also what stage are we joining at. If we're joining at a later stage and there are multiple people in the cap table already, sometimes the negotiations of the documents can protract and last longer. If it's a seed stage company, it's usually quite easy, especially if it's done with a CLA or a SAFE. It's just signing the document and that's it basically. So really depends. I would say, the minimum is like a couple of weeks, and then the maximum can be something like 6 months or something like that, all in all. So really depends. Also very different in the US versus Europe. US tends to be much faster since like everything is pretty much standardized there. In Europe, people are still, trying to get creative when it comes to documentation and try to, reinvent the wheel many times so that like can put some, dents in the process.
Yeah. What sort of innovation have you seen in the documents that you're seeing is kind of delaying the process?
I mean, anything that you can imagine. So it's basically like selling and buying at the same time from the same money, and trying to like engineer different kind of ratchets and sort of anti-dilution clauses with like 3-4 layers or of like if this then that, like if this happens then that happens, and then so on and so I mean, the good thing about the legal profession is that like anything that you can come up with, you can kind of formulate it in a legal way. So there's usually a way to do it. The question is like, is it worth doing it or not? Usually it's not worth doing. But yeah, so that's it really depends. And to be honest, like we try to create the system in a way that scouts get constant feedback. Sometimes it can get frustrating if you have like some sort of like a black box and you don't really understand what really happens in the background. You just see like it's the same status all over again. But yeah, so we try to create it so that the communication is as seamless as possible.
Okay. All right. Awesome. So what's the, like, if you guys have like pin it to 1 or 2, like what's the success story that you guys have, the biggest success stories that you guys have through coming through the network, Flashpoint Scout program?
I would say over the last few months, we did have a number of interesting companies that we're currently speaking to, and we are in advanced discussions. And we actually closed 2 deals over the last, in this year, through one on the VC side and another one on the venture debt side. One is already announced, the other one is about to be announced. But we see that more and more quality of deals and quality of leads are coming out of the Scout program, which really gives us a lot of, it's quite interesting and pleasant to see, right?
Oh yeah, absolutely. So 2 questions again on this entire Scout program thing. So I usually have 2 questions on almost everything, so please bear with me. So question number 1 is, you mentioned something like, Flashpoint is a very data-driven platform. Anton said the same thing. I strictly remember he was like, hey, we have a Python script or something like that written out. So question number 1 is, how do you effectively use that data to evaluate the startups? Like, what do you actually look for from the data perspective? Like, what do you put in and what you get out of that? So that is 1. And question number 2 is, on the Scout side, like, what emerging trends do you see in the SaaS space that you're like really excited about, that you're seeing in almost all the pitch decks?
I can take the data question since I was like largely participating in creating all the tools that we have currently. There is only a fixed amount of data sets that you can look at when evaluating startups and before you talk to the company, right? So like most of the data will emerge out of like talking to the company. But before you talk to them, there is only so much that you can look for. So most of the data points that we're looking for are, when they were founded, how much they have raised, how many employees do they have, what's the growth of the employees that they have over like a period of like 6 months, 12 months. What's the website visitor numbers, how many, like what's the growth of that, and also trying to understand if there were like any news items recently coming from the company, looking at sort of the geo distribution of the company's website visitors, these kind of stuff. We usually look for global companies, and so you can, out of looking at all of these data points, external data points, you can pretty easily like understand where the revenues are mostly coming from, like by the visitor numbers, and you can also pretty easily understand whether there is growth in the company, just because the website visitor numbers are usually then growing, and also the full-time employees are usually growing. granted that this is relevant mostly for our stage, right? So if you were like a pre-seed seed investor, this is sort of irrelevant. Another factor that we're looking at is like the company founder's profile. So you can also understand where they went to school, where they are physically located, what kind of experience, how many years of experience do they have, what companies do they work. So all of this is like external info that you can process and then feed into your systems. And this is all of it is something that we're trying to work with.
Right.
And this, yeah, I'll let Persia take the second question or someone else.
Okay.
On this.
Okay. Yeah. The second question was, what emerging trends do you see in the SaaS space that you guys are most excited about?
Well, I will start with the obvious, like the power of AI that we see in the SaaS companies. Like the transformation that we've seen there is massive, and it's a whole new level of experience. Being able to personalize user experience, automate tasks that previously have been done manually, the analytical component on top of it. So, and we know that there's a lot of hype around it, and every company claims and put somewhere the AI component. That's how usually the conversation starts. But I think that we see the trend going into that direction, and that's definitely something that we also ask ourselves, and we need to understand if it's not embedded, how they expect to be added into the platform product, whatever it is, and trying to understand the vision from that angle. I'll say another trend that we try to follow and understand and see what's out there was like a low code, no code revolution that we've seen, that everyone can build custom applications without even talking to their IT teams. And we've seen a lot of like efficiency, productivity coming out of that as a result on the business side as well. So yeah, I think that's what comes out of my mind at the moment. I don't know if anyone else has anything to add here.
I think vertical SaaS is also a trend that keeps re-emerging. I mean, every market cycle has its own bundling and unbundling trends. I think this is something that we're seeing nowadays. There is like a next generation of tools coming that are replacing the previous generation with, sometimes bundling and sometimes unbundling. I think now it's more like a bundling type of trend since people are trying to reduce costs. And then we see that more and more features are being added to the same type of product, and that having sort of like next gen architecture from the get-go can actually win customers also on the larger side. So, this is happening across the board with like HR, sales, and so on. Another interesting trend that I would highlight is basically the emergence of new sales tools, just because the traditional channels are mostly saturated and people are trying to scramble to come up with new ways to get to customers. So you'd see things like, tools built on top of LinkedIn. You would see tools like automating the spin-off or spin-up of like new domains for email sending, email warmers, and stuff like that. So very interesting new trends happening around this one. So we'll see like how all this will like emerge and which are going to be the successful players.
I would add here also resurgence of blockchain. I come from financial background, and there's been a lot of talking now about tokenization of financial products and real world assets. JP Morgan has about 30,000 programmers. I read it's a huge development company, not an old brick and mortar bank. So I would say that blockchain will find a way into some verticals, and it will make a lot of impact. And combining it with artificial intelligence, this means quite a lot of new options and possibilities for founders, for startups, and for investors as well.
Agreed. I also think that the emergence of blockchain was kind of tarnished by all these coins and crypto and all of that, because people kind of made it synonymous. Like every single time somebody mentioned blockchain, people used to think that's because it's related to crypto, which are two different things, same technology, but two different things. And I think as a technology, blockchain has still have a lot of potential. It's probably going to make a comeback. Yeah, that's interesting to see that. One other thing that I want to know from you guys is because you get to see a lot of pitch decks almost every other day or almost every day. Most of the companies, especially the ones that are leveraging AI, are building exactly the same tool that I think Persia and Marton has already touched. They're like, either bundling or unbundling them, reducing the cost or doing something similar to that. Or they're what they're doing is they're creating a lot of productivity increment sort of products. Like this can do faster, it can write you a blog faster, can do the content creation things faster, like all of that thing faster. The question that I want to ask you is, do you think most companies are like not innovating enough with AI, and what they're doing is they're using the same OpenAI's LLMs and building on top of that, and that is just like another ChatGPT wrapper, and then just trying to sell that. And most of these companies, they're like not suitable for VC businesses. So do you see these kind of pitch decks almost every other day? If you see that, yes. If you don't see that, like why not? And like what's your thought on that, like in general, on these kind of startups? Anyone can take that.
Well, I can start.
Okay.
Definitely there are some companies out there that are doing AI AI as PR to some extent, and I think it's a hard task actually to find the winners of AI, let's say, at this stage, just because there's a lot of companies out there, a lot of startups out there that just refocused either from like even like blockchain or some other places and went to this new place, and like because there's a lot of hype and a lot of funding in the space, there's also a lot of ChatGPT wrappers as you mentioned them. But I think in the due diligence process, of course, you will weed those out for sure.
Right.
Yeah, I think there is a good article from NFX that came out when like ChatGPT became mainstream, and the title was "AI is like water," right? And that's like exactly my opinion. It's nice, it's being bottled somewhere, but it's just water, and it's there, and it's very similar to electricity or to cloud costs for that matter. It's not really about AI; it's really about what you're doing with that. And there are some use cases where AI is being used like extremely well. I think it's very rare to see quality of the product being much better than the underlying model that it uses. So you really need to make sure that your RAG and your sort of fine tuning works really well for the underlying model that you're using, and you also need to be sure that the costs will not skyrocket for this one, because like a very common phenomena for these companies is that the gross margin is actually extremely low because they're using so many requests and tokens for these like OpenAI or Claude or whatever it calls, that basically like it eats away most of the, like I've seen companies that are basically not even like, their gross margin is sometimes even negative because tokens that they're using. So this is like problems that you need to overcome. Of course, the cost of this is going to go down massively for sure, like as it does always. But then the question is like, what is the specific data set that you have and the specific knowledge that you can add? Maybe it's integrations, maybe it's like a new way to like use or combine it with your existing technology that will allow you to do some kind of a special unlock. But to be honest, like it's very hard to like I think in a couple of years you will not see like significant differences in the usage of AI. So
yeah, that makes sense. Okay.
Like looking for AI companies per se, it's like there are only very few AI companies that are fundamental AI, like infra companies that will be like extremely valuable, and the rest is just going to be like using it similar to how people are using cloud.
Okay. Okay. So a question related to fundings actually, because we have seen 2023 was kind of a very difficult year for startups. So do you guys think, or like what sort of trends do you see? Is startup funding finally picking up, or investors are still kind of slow? You're seeing a lot of deal flow, but are you still investing at the same pace as you were prior to 2023? Maybe not 2021, but maybe getting back to normal. Like, so what do you see, guys? What do you guys see there?
Well, I can definitely say that there is some interest picking up. We hear a little bit more interest into deal flow, or let's say exploring the potential interesting deal flow. We have to think into separate sets. One is AI related startups, where immense amount of money available if you have the right product, and then it's all the rest. So all the rest is still going pretty slowly, but maybe starting to pick up, depending on the KPIs, especially the ARR. On the AI side, I mean, you can just write a white paper and present a great team, and you get 100 million tomorrow. No problem.
Okay. That's interesting.
That's what Mistral did. You are correct.
I think what we see on our end as an investor, definitely from the investor side, there is much more dry powder for this year, thinking how 2023 was. A lot of people struggled to raise, or they were hesitant to actually make investments. So definitely we see much more competition when we go out and when we bid for a transaction. And I think from the startup side, I think definitely there is much more appetite for founders to actually start thinking and raising at the moment. Last year was more, let's do a bridge round, let's wait, what is the valuation and things like that. But now actually we see bigger rounds and more people looking to make to raise more funds. So the activity overall is picking up. I agree with the trends around AI and things like that, but I think this is a separate topic. But I think, like, and from a valuation perspective, we also started to see valuations not necessarily going into the 2021 levels that we've seen, but also like gradually increasing as well. But I think now the conversation is more around what's the path towards profitability, and investors are more and more interested to see the operational efficiency, whether you are profitable, how to get profitable, and things like that, rather than growing at any cost, and we don't really care about your cash burn. So I think that's the trend that we see at the moment, and conversations that we have.
Yeah, and I think it's a good trend to see. Yeah, because a couple of years ago, founders were totally spoiled by like just burning cash right and left. Anyhow,
well, people were at home, so they were at home behind desk, and then they went into meetings and got money. I know.
Yeah,
there was a lot of money in the markets back then. I think it's right now it happens that it gets back to normal to some extent.
Yeah, totally. Before you guys mentioned that there's a whole automated process, and I think I've heard a tool which is called like multi-tool. So what exactly is that tool? And can you guys just like give a quick sort of a walk around that tells like how does that tool actually work?
Sure, happy to do that. Let me actually share my screen and show it to you.
Okay.
Just one sec. So you guys should see my screen now, right?
Yeah.
Yeah, so let's say you're on a page of a company. This is basically structured as a Chrome plugin. So the way that it works is that you click on a button, and then it should ideally open. I'm using sort of a hosted version here, so I can show you how it looks from the Scout's perspective. So what you will see, this is now multi-tool being open. So what you will see is that you have like an info pane here, which shows like all the things that we kind of have about the company in our CRM, like when we did last talk to them, what's our kind of note here with the company, what's the status of the company, and who's the owner within that. And then also if you hover over, you will like see what that status means. So like we're investors in this company, right? If it wasn't the case, but this was like a random company, you could kind of click on this send a note button and just send some note to us. And then once you're done with that, you can send it to us. You can also add the pitch deck if you want it here. And so you can click send, and then it will get sent into our system. And then, you know, at the pane right below that, there is an information pane, basically, which is coming from various sources. You can see where the company is headquartered, when it was founded, when was the last funding date, how much did it raise in total, who are the investors. You can also like go into their profiles to check out like quality of their investments. And then there is like an analytics pane, which shows how many employees do they have, what's the growth of that, also the website visitors, and then what's the growth of that. And so these are sort of indicators, like, for example, to which fund this can be relevant to based on the number of employees, but also like, you know, the growth profile basically sometimes mimics the growth profile of the company as well. And then the last bit, which I think is the most interesting bit here, which is our sort of like special sauce. As mentioned earlier, we're looking for like capital efficient growth. A lot of the times it means that there is sort of like an Eastern European or Israeli person in the team that has connections to regions which have, you know, lower cost of workers basically in the R&D teams. And this helps us to uncover whether someone from the founding team has actually these roots. So, you know, like tool itself goes and finds the founders of the company and then looks through their like first and last names and tries to analyze that based on the name, but also based on the language and the location where they're at, plus the universities that they went to, and then helps us to uncover hidden expats. Now, on the other side of the tool, you know, this, let's say you sent this company, there's also a way to kind of see how, I mean, this like doesn't show up here now, but you would like see the statistics of it or of the submissions that you've made. And then you can kind of have an understanding of where it is going and how it is going with that. So that's basically like how the tool looks. And then once there is some action on the analyst side, so this like when you did this submission, this gets routed to an analyst within the team based on all of this information that is here, based on where the geography is from, based on which fund you've submitted it to, and then that analyst is receiving a task in the CRM, and ideally within a couple of days they review the opportunity, and if it's interesting, they get in touch. And then whenever there is something happens, you get a notification, and then you get feedback from within the CRM on like what really is happening with the company. So that's like the gist of the tool. There are other features like you can go on LinkedIn and basically try to get in touch with a person that you're not like, let's say there's a person that I want to get in touch with. This tool actually helps me to, so you see that's like a fast connect button. This allows me to basically instantly send a connection request to this person with a message that is pre-populated from the information about that person. So it kind of helps me to really like speed up the process of getting in touch with people. So this can be very useful in terms of LinkedIn outreach. So that's like another feature of the tool. And there are some others as well. I won't bore you. This is like the gist of it.
Okay, yeah, thank you. Great. This is a great looking one because technically speaking, you have to go to many of them in order to figure out like, okay, what's the company size is, who the founder is, you do the background check. So good to see like all things in the same place, and who doesn't like a quick Chrome extension. A very random sort of a question that I have on top of this thing. So suppose because you mentioned that you're looking for expat who has these sort of the connections to the countries where the workforce is kind of not as expensive as it is probably in the Western European countries, in the US, in the UK, that kind of thing. So suppose the person who's pitching this, the company that you're looking at is an Indian guy, obviously has a great talent in India, but the company is incorporated in the EU. Does that match your criteria, or you guys are like, no, like strictly European, people are European, the companies needs to be European? And how remotely do you accept it to be? Like, how remote the process needs to be for you guys?
We have a mandate that like wants us to invest most of the money that we handle within our sort of target criteria, which is capital efficient companies, primarily with founders from the EU and Israel. But it doesn't mean that we will invest like 100% of the capital here. So we have some allowance to invest in outside of that. And obviously, our primary goal is to support founders and also generate returns for our LPs. So whatever like makes that possible, we're very interested in those opportunities. So whether the founder is Indian or South American or whatever, we actually don't like care as much. We care mostly about the business quality and also about like how large it can get. So sure. So if there is a good company that you know of, which is in the EU with Indian founders, very happy to talk to them and potentially work together.
Awesome. All right, good to hear that. Okay, so I just want to move it towards the closure of this particular conversation. So there are a few questions that I want to ask. A few on the founder side, like because you guys see a lot of pitch decks every day, so you see a lot of founders making the same mistakes every day, and I really want to to dedicate a few minutes to helping founders as well. But before I asked that question, like one last question that I want to take on deal sourcing is, so there's especially in B2B SaaS, primarily what you guys are interested in, there's a huge competition now, because like everybody, almost like every VC have this thing, like we're investing in B2B SaaS. Every new fund manager is investing in B2B SaaS. Every second, third fund manager, they're investing in B2B SaaS. So how do you handle the increasing competition in deal sourcing? Like how do you figure out, okay, like that's strict, we will step in and out if the valuation is this, we'll write this big of a check, we'll only lead the rounds. So how do you guys take care of all that competition?
Yeah, I mean, I can take a stab at that, or Persia, do you want to?
No, go ahead and I'll follow.
Look, I mean, it's always about access, and it's always about like having a proper brand, and it's always about speed. I think, there was a very interesting research a couple of months back, which it's actually research done periodically, where it looks at like what founders care about and what VCs thinks that founders care about, right? And these two things are not always the same. Like actually, many times they're not the same. So what founders care about is less, the length of the connection and a lot of other things that VCs think are important. But it's more about actually like being a normal person, being a helpful person, being, working for a company that has a decent reputation, and also like just general speed, right? Like, and also like industry expertise. So if you have these things, I mean, these are basically the most things that people care about. We, whenever we are trying to do a deal, we're trying to make sure that the founders' needs are like met to the letter, in a sense, right? So if they want a quick process, we're happy to provide a quick process. If they want to have some client intros, we're happy to do that. There is always going to be a competition. We believe that they, like having all of this data access and having our sort of models, having our scout network, and sort of our personal network allows us to basically get in touch with the right opportunities at the right time. There is going to be competition, and it's okay. It's actually a good thing. And there's also going to be situations where we think that it's actually not worth going into the competition, however great the company is. Mm-hmm. We have a target return that we're targeting, and if the company, let's say the company's valuation is not a fit that criteria, we're happy to walk away. I mean, we don't have to make every deal, right? Yeah. So it's always about like finding your match. It's like, people scream that you need to, hit the ball, but you're only hitting when the time is right. So, that's, I don't know, Persia, do you want to add anything?
What I want to add is even when we think at the beginning of the process and how we usually try to overcome competition, because we do a lot of outreach as well, right? That's part of our business model. And I'm pretty sure that a lot of founders, especially the good ones with the very interesting products, receive many messages on a daily basis, whether this is LinkedIn or email or things like that. So ways that we usually try to overcome that as well is through warm introductions. And that's when the relationship with scouts is very valuable, or when the relationship with other VCs, existing investors, earlier stage investors are very valuable, because that's when you can go closer with a warm introduction to the founder. And this is something that we've seen that it's working pretty well. And also, as Marton said, having the experience, having the knowledge, it's definitely very attractive to get to this first introduction.
All right, cool. Yeah, thank you for sharing that. So the last couple of questions that I want to ask you is specifically they're focused on the founders. So you guys see a lot of founders, pitching you right and left and every day. So question number one is the biggest mistake that you see founders are still making to this day, like regardless of the information and the knowledge out there, but they're still making the same mistake. So I wanted to come out from the VCs like, hey, please don't do that, because that's a red flag for us, or that kind of a thing. So mistakes and then advices. So let's do a quick sort of a round, coming full circle at the end. So everyone can just share like, hey, this is my advice, and this is the mistake that you guys are committing. So please don't do that. So like, yeah, let's start with Paul.
Sure. Well, it depends what you're referring to, because if it's the pitch deck, the messaging, the targeting,
all of that,
all of that.
All
okay.
of that, yeah.
So I think one of the most common mistakes is actually people not doing their homework in terms of actually creating a sort of like a list of leads of investors, let's say, and then those investors actually being a fit for the space where you're looking funding from. At the same time, the messages needs to be quite clear, quite short. Don't write an essay to an investor. That they don't have the time. At the same time, make the pitch deck lean, clean, and short. Make it clear what the problem is, what the solution that you're coming up with. What's your unique selling point? What's your unique insight, and why is your team best at tackling that solution? I think those are my key points as an advice for startups.
All right. Persia, let's go ahead with you.
Yeah, I think Paul touched a lot of very good points. From the investor side, I would say never do long pitches. Like, people get lost in the process. Just make sure that you have a story and you tell the story very structured and very straight to the point within a very short period of time, and leave time for Q&A. I think that's what we advise, especially on the first call, because like investors don't have a lot of time to listen to you and try and understand what problem you're trying to solve. So be straight to the point and short. That would be my advice.
Okay, Damir, please go ahead.
I would join Persia and Paul. Definitely work on the pitch deck. Less is more. It's really important to understand less is more. Again, because founders tend to overstate, overwrite, present with thousands of diagrams and how this is better and that is better, etc. And you get lost on page 4. What are they building? What are they doing? So really keep it clean. It's 10 to 12 pages. It's enough, and not a lot of text. Use 16, 18 fonts. Don't go into small details. Get to the intro call. This is your main point or the most important point of the pitch deck is to get you the meeting. And then on the meeting, do a short introduction. Do an elevator pitch. You have to explain what you're doing like you were explaining it to a 5-year-old kid. You can do it in 2-3 sentences. If you're not capable of do that, then you're doing it completely wrong to an investor. I have this tricky question. I go through the pitch deck, and then I have this intro call, and I say, okay, give me a short overview what you're doing. And this short overview, I say 2-3 minutes, 5 most. And then after 10 minutes, when a technical founder especially, keeps talking about how they're solving this trick and this and that, and I say, look, we are losing time. and then they realize and they get about a little bit shocked, how should I proceed? So keep it really short, explain what you're doing, leave the investor asking you questions, try to answer it in really short, concise way, and use the investor updates. Investor updates are the most important tool that you can have to building a future relationship, full stop. It's pretty simple. There are 3 main points. So pitch deck, clean pitch deck, pitching, short pitching, and investor update. If you use those three things, of course, you have to have a great product and great team. But if you do use these three main points, 3 main strategies, I'm definitely sure you will get funded.
Awesome. Martin, please chime in.
Yeah, I just have one sentence: embellish but don't lie. I think that's very important because a lot of people kind of fall letter category. So embellish your achievement. It's fine. Just show what you did great, but never over exaggerate, because you will get found out anyway. So it's not worth it.
Do you have any funny stories about catching some, let's call them liars?
A lot of funny stories.
Okay.
Too many, unfortunately.
Non-shareable.
Yeah, so that's my advice.
Okay.
Yeah.
Awesome. So, all right, guys, appreciate the time. Thank you so much for answering all the questions. I hope whoever is watching it, one, they consider, working with you guys as a scout, and 2, they take some notes from all the, piece of advice that you guys have shared. And hopefully the next few pitch deck that you'll see are not going to be the same old ones that you're seeing every day and the same mistakes every day. And hopefully nobody's lying again. So, which is a funny thing to say, but anyhow, thank you for the time. I appreciate it. It's been fun hosting this. Enjoy the day.
Thank you very much.
Thank you.
Take care. Thank you.